All right, now I think we could look at my screen. So there we go. And real quick, let's start with just the calendar because this will be a segue into the. We just had the hedge fund call, and it was a very interesting couple of topics we had that I'll share with you in just a minute. But before I do, to make it kind of relevant, this is the economic calendar this week. The biggie CPI on Thursday before the market opens, but there's various and sundry other things. Some stuff in Europe that's going on, some numbers over there. So it's between this and the fact that we have a bunch of earnings this week also. Toward the end of the week, it's big banks, and that, JP Morgan Chase on Friday, Bank of America, Citibank, Delta, United Health, Wells Fargo. So yes, most of these are before the open, or if not, they're after the close. And so this could create a lot of volatility. And so it should be a really good week. And I'm going to segue again into that commentary in just a second that we talked about. But there's a lot of potential shake up the market for the short term things out there. So just be really aware of that. And particularly CPI. I may do a live session for CPI on Thursday. If our storms go away and I'm certain that my system isn't going to crash. I've had power and internet problems because there's a really big storm here on the central coast of California. So anyway, that's the story there. I'll let JVC do the TRG calendar at the end, JVC, if that's okay with you. And
Sure.
Let me put this away, and I want to take a look at real quickly. Basically, all the TPO views kind of look the same. This is ES, 4-week high below us. The overnight basically just consolidated on Friday's high, and basically that's true with all four indexes. I can drag them all over here, but you can go look yourself. It's a pretty interesting setup. We still haven't really priced in what happened Friday. Friday was the reaction rally. So what happens next? That's the big question. And, we could easily go from here, back into the range, and that takes us all the way down, a couple hundred points. And we could also go up. There's a bunch of old single prints above us around 4,000. And, that's not far away now. I mean, we're 70 points away from that. We have a little decent gap up this morning, 24 points so far, but it's really low volume again. 182,000 contracts have traded. For a Monday, in January, not the first week, this is low. And anyway, the perfect segue to the hedge fund call. So real quickly, again, for some of you that are a little newer, you may not know what I'm talking about when I say this. We tend to talk about it every Monday. I get to be a fly on the wall on a call with a bunch of friends of mine, acquaintances of mine that run reasonably large trading desks at a couple of different types of firms. We have a couple of guys that are in family funds, fairly large ones. One guy is his own fund because his father was really successful. He's a trust fund baby type in Asia. And then we have a couple of guys at major banks and on derivatives desks, and they're interesting because they're always wired into Wall Street. And, there's a lot of things they won't talk about on just a friendly call like that. But the general way the wind is blowing, we do talk about. And then, there's a few other guys that run smaller hedge funds, and total of about 17 people now. On any given morning, we have between 12 and 15. Anyway, this morning, we had two topics I thought I'd share with you. The first one is we talk about old school stuff because some of these guys are like my age or close to it. And if you don't know what the January barometer is, that's an interesting thing to understand. Statistically, whatever happens in January since 1950, so whichever way the market goes, the rest of the year is 83% likely to go. That's the January barometer, it's called. And it's, so as January goes, exactly. As goes January. Amy nailed it. And this is interesting to know. Again, it's not an edge, but, January is watched as a barometer. Okay, so that was the first thing we talked about. And again, I just want to bring that to your attention. If you weren't aware of it, it's an interesting little statistic. Google it, and I'm sure our statistics guys will give us more information about that. The second thing we talked about And again, nobody says, well, we're doing this trade, but people talk about what's going on and what their focus is on. And this was interesting. One person brought this up and just kind of asked, and this is how we kind of do it. Are you guys hearing this too? And, is this your focus? And so basically, Wall Street is there's lots of layoffs, and people didn't get bonuses last year because most funds didn't make money. And, even Goldman is laying off a ton of people in all different groups, not just their more speculative ones. And so, the street is very, very focused on, number one, staying employed. And in order to stay employed, they have to make money. And this is a difficult environment to make money in compared to some of the other environments we've had. So, the chatter right now is really interesting, particularly for people like us. The focus of bigger money, and this was a collective agreement as to why volume has varied so much. Some days, like right now, we don't have 200,000 contracts, and that's crazy. And then other mornings, we'll be at 500,000 this early, an hour before the open. And everybody agreed on the following statement that most of the people on the street at this moment, now that we got through January and we passed NFP, including Friday's NFP, they are focused on tradable events. When there is a tradable event, the volume comes out of the woodwork because everybody wants to trade that event because everybody wants to keep their job. That was the consensus. And I thought that was fascinating because the wind really blows both directions really dramatically on Wall Street. If you recall, when we were talking about the hedge fund call a year and a half ago, these guys were all buying new boats because they had a record year, in 21. And then 22, a lot of them got laid off. That's the way it works. So they believe, and I thought this was just really interesting for you guys to hear, that around NFP, CPI, PPI, and obviously we have that coming up, CPI coming up on Thursday, FOMC minutes. Everyone is focused on those events even more than usual. They always are because they want to kind of think, how's the market going to go 6 months from now or a month from now or whatever. But they also, because they have so few opportunities, everybody's piling into the same opportunities. And so that was kind of the consensus why we're getting these kind of movements where, we're in the range and value is more or less agreed on. And then, some little piece of news comes out. It's really not that significant, but boy, we're off to the races. Or, Powell says something and we're off to the races. And so they believe this is going to continue and that the big volume, trading volume is going to continue chasing these edges of the range and these big giant moves. So kind of be prepared for this kind of action to continue was the consensus. And I thought that was really interesting to share. So anyway, let's see. Those events is more or less positioning. I don't know that I would use that word. They're being opportunistic is the word I would use. I don't think that they're really interested in any significant levels or positioning large amounts of capital. I think the interest is much more, where can we see a really good opportunity we can push really hard, really fast. So, this week we can say, hey, we hit this percentage profit, when everyone else is not making money. That's really the focus. So anyway, I'll leave that comment there. That's what we talked about. I thought it was fun. And the January barometer, always worth checking out. Let's see, JVC, would you like to talk to the TRG schedule real quickly?
Sure, we can do that. It's standard schedule this week, actually, at the moment, although you just mentioned possible ad hoc, right?
Yeah, possible ad hoc. We've had a lot of power and internet issues, so my concern is I don't want to schedule an additional event and then have to just schedule it. But as we get toward Thursday, talk Jeff, I'll know more, how stable we are and how much damage has been done. And so look for the schedule. I think, in fact, here, I'm going to drag over our calendar. There's our calendar for the week.
There we go.
Stretch it out a bit. There.
Yeah. So keep your eye on the alert stream for a special event to get posted from Jeff later in the week. Other than that, though, standard week, we've got the scalping with Jigsaw later this morning, 11:30 Eastern. And then structural stuff tomorrow is going to be talking about aggression and imbalances. And then the setup for the week, or for the Tuesday anyway, is going to be the not a price rejector, And we're going to actually open up the imbalances class to the public, since that's one of the most common myths / misconceptions, whatever out there, is that, there's this magic number on imbalances that is.
Oh, you see that constantly on every Facebook page. Yeah.
So we're going to give that a chance to bring some new folks in and hopefully show them the light a little bit. We'll see what happens there. But you'll be able to, if you want to invite your friends or anything like that, who has friends? But if you're one of those weird people who has friends, you can do that. We're going to be doing trading the first hour on what is that, Wednesday? Yeah, Wednesday.
Yeah, we're doing that Wednesday.
Yep. And then dojo after that. And of course, Thursday is the big structural day with fishing trip. And then the tool for the day is going to be unfinished auctions. And what do you know? The setup for the day is going to be unfinished auctions. So that'll be a good a matched set to come to. We will, of course, possibly do the ad hoc. So keep your ears tuned for that. And then we'll recap it all with Dino, who will tell us how his week went. And then the final trade of the week, of course, the CME closing setup, which is almost always a really good opportunity.
You had a really good trade on that Friday yourself.
That was great. It was really clear. The structure gave the clear clues. I was early. I was definitely early, but it was micros. So I scalped in and around my initial core short, which my very beginning of the position, I ended up just scratching. So I pretty much got in my first contract at exactly the spot that the trade was over, but I made plenty of money on all the other ones. So it was fine.
It dropped. That was a nice little drop. It was close to. It was more than 10 points. Yeah, it was like 15.
Yeah, it was once it decided. Yeah, we went far enough, and it showed it. And then it was time to turn around and go for those single prints. So that was a real nice one. So yeah, those are a lot of fun. Join us on Friday for that if you can make it around the close.
I haven't decided what the topic will be in addition to the weekly recap, but I will post it in that stream where we have suggested topics. I'll pick one of those ones that was suggested. There's a bunch of good ones that were suggested there. So. Cool. Real quickly, I want to go back to, there's a couple of comments in the pit. Amy's comment about those events are price discovery. They are. I just want to add, to what the hedge fund guys were talking about. They're not the guys in the discovery mode. They're the guys that we see piling in with really big size at the edges of the discovery, and you see that a lot. And sometimes those edges move around, but that's
how push it a little further. Is that kind of
push it further, or when it gets really asymmetric for them, they have totally different risk models than we do, And if you think about it, if you're slinging a lot of size and you get the direction right, you don't need a lot of movement. And so imagine if you were throwing 1,000 at the ES, and if you got a couple of ticks on even, 3/4 of it, that's a big trade. And then leaving on a tiny bit, back toward whatever the VWAP ranges or whatnot, they tend to think more that way, whereas we tend to think in daily drawdown and where's our stop. They don't have that kind of risk management. It's a different kind of mentality. They're thinking much more about, the statistics of it because they can, they can afford to. So
exactly.
They also have much better mathematicians than most of us are. So that helps as well. But anyway, it's a very interesting, just that comment came up, and everybody who trades an institutional size portfolio, which is about half the guys on the call, instantly agreed with it. Yep, that's what's going on here. Yep, that's us. Yep, right here too. My hands up. It was like hysterical because we almost never hear agreement on anything. It's always a good debate about most things. And they're also in different parts of the world. We've got guys in Asia, we've got guys in Europe, we've got guys in New York, Chicago, and California. And so, it's interesting. Anyway, so
we have a holiday on Monday?
Yeah, that was the next comment I looked at. And Tom says, yes. What holiday is that?
What is the holiday?
What holiday is it?
I'm scratching my head.
Oh, it's MLK.
Oh, okay.
Okay, so can you look into that if we need to move? Is Monday totally closed? Is that, or is it a half day? Anybody know?
Let's see. Tom threw a link. Oh, is it to the CME? Oh, it's to that horrible spreadsheet. Ugh.
Where you have to download it. Yeah. All right. Well, whatever. We'll update everybody on.
We'll figure it out
with the Ides of Monday and all that, and we'll post an update. Yeah. That. Okay. So let's see. So we got to that. Yes, exactly, Amy. I understand. I just wanted to be clear about the differences. Price discovery creates an asymmetric opportunity, that I'm playing with a couple of micros and they're playing, with hundreds of ESs. So, every now and then, if you want to have some fun, go into a sim and just try that and to see what it feels like. And you realize how, institutions can make a lot of money on very short movement. 3 ticks is a really profitable trade if you're trading size. And that's why you see these algorithms constantly cycling 3 ticks. And we just, we're cannon fodder. So anyway, good stuff. That's interesting. The beta and alpha boys are playing. It's the beta alpha Super Bowl. Yeah, exactly, though. That makes total sense, Tom, because everybody is trying to build a model or a tactic that will allow them to pull money out of this market. And guess what? These kinds of markets are by far the absolute most difficult to do that in. So, it's really challenging. And, so if you're feeling challenged, you're not alone. And the best of the best are in the same boat you're in. And this is just cracking me up. I'm looking, I already showed you guys ES and NQ. Here's RTY. Just stick it there so it's easier to see. That's the TPO for the overnight, and this is YM. I mean, they all look almost identical. I showed you ES and NQ. It's just a really interesting situation, and this is ES again with a poor week low right at the spot that we just took out that old poor week high. And then single print there, block of single prints up here. Lee, are you up and running? Do you have anything you want to add to any of this? I know you're having.
I can't share my screen, but the interesting thing from Friday and the one time framing up is we've got a couple of tasty lumps of single prints from Friday, so we've got to see what happens if we approach them.
Yeah, this spot right here, we were talking about this at the Friday close. That was the one JVC was targeting. Right there. Between it was around 14 and down to 10ish, that whole area. And then look at this big chunk right here, right in the middle of the old range again. So even if we're going up here and we do nothing but retrace to the top of the old range, that's from 35 down to 880. That's a pretty good sized drop, and we still won't be going one direction or the other. We'll still be working this range. So it's really important to keep that context in mind and not to have too strong an opinion. This is really a market to find really good opportunities to just join whatever's happening. And being a contrarian like I am can be a little tricky. So anyway, let's see. I'm reading through. Well, to Tom's comment, they're affecting the ES. Yes, they are, but there's a limit to how much they can affect the ES because the ES has to be reasonably correlated to the thing it's derived from, which is the S&P 500. So all of these things impact each other, but it's like rubber bands. They can't push their own impact far. One event can't push an impact because, particularly with the ES, because there's 500 equities that we're deriving from. It's a lot easier to play that game in YM and in NQ, and it does happen. I'm not saying it doesn't happen in ES, but it's not. There's so many variables at any given moment. Really hard to understand how it might do that at any given second. Is my point. No, the market has not decided what it wants to be when it grows up, and you know what? Again, that's wonderful for us. Because these tradable ranges are beautiful. This morning before this session, I was just scalping short up here. And, again, it's just really easy to see what's happening. It blows through a ledge. It, percolates for a couple of seconds, and then we get a nice pullback, and again, if you just look to get halfway back into the range that it was in, here's the bottom, it breaks out that old high, gets up here. If you're looking to fade these, just look for half the distance, which gets you right back here, and look how much it traded there. That's really good scalping typically in the early mornings if that kind of behavior is going on. So those of you that I haven't scheduled yet the early morning overnight class, but that's a tip about it. I do plan to schedule that shortly, by the way. I know I've been saying that a long time, but I'm just finally getting routine enough at getting up at midnight or 1 a.m. here so that I could functionally do that. So stay tuned. There will be announcements. All right, let's see. What else do we have, guys? I think
that's it.
All the big stuff. One other comment I was going to make, it remains a week to be careful, if no other reason, because of the thin liquidity, which we still have, by the way. And let me bring up my ES DOM, which has full liquidity on it. You can look at the gaps. There's, double digits, really low double digits some places, and that's going to keep us moving around. That's just all there is to it. But I think it's a pretty tradable environment, if you're patient and wait for your setup, whatever it might be. There, like JVC setup Friday, that we were up there for a long time, and it would have been easy to say, oh, it's not going to work. And then sure enough, right about everybody was doing that. That's when it worked. So, I think this is important. Here's what I'm doing, just for those of you that I've shared this a little bit. As I said last week, I'm copying to 20 accounts now, but I don't do it all at once. I kind of scale up and down depending on the risk and the opportunity. And last week I was maxing out at 7 accounts. I wanted to get a couple funded and was trading a couple of my funded and cash accounts. And I didn't want to push the risk. Number one, infrastructure could fail and I could get stuck. And also just, not a good time to do that before NFP. But now that we're past NFP and, whatever happened Friday will get priced in today, more or less, one way or the other, or both. This is where I'm going to start scaling up again. This is the time to do it. But again, I'm being much more particular about where I'm putting trades on. I've got this big giant sign on my keyboard, sit on hands drill and open 5 drill. I'm only taking open 5s that are really obviously good setups. And, it's been working really well, but I got to say we talked about this a minute ago. It's taking really total focus. And, so I'm not trading any ETFs right now. I'm not doing anything else. I'm sleeping, exercising, eating, and focusing on executing against this stuff because it's a really good opportunity to do that. So that's my story. Lots of talking heads this week. That's true. And, we have lots of little numbers in various parts of Europe and Asia in our pre-market. Combine that with earnings week starting and all those big banks coming at the end of the week, this could get crazy. We could easily do, a 500-point range over the next 5 days. So, and also with respect to the Fed, there's this big question, after the number Friday, are they done, and it's not worth debating, whether they're done or not. When they're done, they'll be done. And, trade what happens. Don't predict the future. That's my final thought. So
and with that, I think the future is calling.
Okay. Lee, anything you want to add?
No, nothing from my side. Just normal, Monday morning, stay frosty, don't make your week in the day.
Yeah, that's so important. I was looking at this short this morning, and for a moment I started to scale into it. It's like, what am I doing? It's not even Monday, hasn't even opened yet. And so I backed off and I took a nice little profit out, and it would have been bigger, but you really got to think that way. You got to really be careful. Don't try to make your week. We really don't know what this is going to look like yet. Well, one thing that came up with one of the guys on the hedge fund call that I was talking to beforehand was just this last thing. I'll leave us with this. We were talking about the single prints and this whole 4,000 area. And, his math guys are statistically convinced we're definitely going to punch up there in the very short term. And so, we were talking about that. And for that to happen and then come right back here, that would pretty much throw everybody off sides. Or if we were to go up there and could get a good buying run started, and, if the earnings season turns out to be good, we could be pushing up into the 4,000s again. The money has nothing to do right now. It's sitting on the sidelines. But, the correction could easily go down, to 3,000 or lower. So you really have to keep that risk management focus and that stay nimble, and, don't try to get rich in one day. You really got to keep pounding that in your head when it's moving around this much, or it's easy to get, really, really caught up in it. And I know that from experience. I've done it. I've gotten caught up in it. So, okay. Calibrate yourself by looking out further than just today. Yeah, that's important. And also to remember the risk here. We have had some really sudden, really big movements with no pullbacks. And, so when you're trading short, for example, say to yourself, what would happen here if a massive short squeeze started? Am I risk appropriate? Can I get out of the way fast enough? what would that mean? How much impact would that have on this trade? If I'm copying it, how much is that across all my trade? You really have to think that way. Don't just look at the setup and say, oh, this is a good setup. Thinking in bets, I'm going to trade it. In a volatile environment, risk management is an important piece of that, and it's important to calibrate is a good word. Calibrate your size, risk management appropriate, and keep perspective, keep context, keep zoomed out. Remember what I said Friday about the my weekly kind of context session? I did that yesterday, and I came to this exact conclusion that I really have no idea what's going to happen up here. But if I look at the strongest index, which is YM, and I look at the perfect symmetry of that overnight volume profile, and then I look at, big chunk of volume, single prints, it just, look at the size of this range. It's the definition of anything could happen. So, keep that in mind, and I think we'll all do pretty well. All right. That'll be it.
And with that, have a good day, everybody. And we will see you later in the morning if you're going to be on Scalping Jigsaw. Otherwise, later in the week, and see you in the pit. Thanks, Robert. Thanks, Amy. Bye-bye. Everybody else who's been interacting in the chat. We'll talk to you soon. Have a good one.